After falling to historic lows last year, mortgage rates are rising sharply. On April 5th, they hit their highest point in more than a decade, with the average US interest rates for 30-year fixed-rate mortgage topping 5%, up 3% just a year ago. According to the housing industry experts, rising interests are good for the red-hot US market. However, after nearly 2 years of an exceptionally fast-paced, expensive market, a cool-down is just what is needed to slow demand and temper home prices. But is the Manhattan housing market following these trends? If you are a buyer or seller in New York City, you are probably wondering if it is a good time to transact. I'm Dana Sapir with Compass Manhattan, and today I want to talk about how rising interest rates are affecting today's housing market. Mortgage rates tend to change alongside interest rates set by the Federal Reserve, which says it will raise rates at a total of 7 times this year to tame inflation. The higher mortgage interest rates are eventually expected to slow the housing price growth and provide relief to buyers, since sellers are less likely to ask for a high price if prospective buyers are facing higher monthly mortgage payments. Higher mortgage rates are slowing the pace at which homes are getting sold, meaning more homes stay on the market longer. When some buyers drop out of a given home buying market because they are turned off by higher rates, it eases market demand and leads to fewer competitive bids. Manhattan market, however, behaves differently. Although the luxury condo market has seen slowdown since the end of last year, sales throughout the first quarter of 2022 remained robust. Manhattan real estate sales market is on record-breaking numbers, recording the highest number of units ever sold during the first quarter of any year since at least 1989. This is according to the new report from Douglas Elliman. First, a large portion of the New York City market is independent of mortgage rates. Cash buyers now make up 47% of the market, and higher-end properties, which are usually not mortgage dependent, have grown 24% compared to the first quarter of 2021. Market appetite is particularly big for smaller apartments, larger units with high square footage and reasonable pricing, and almost anything in the most popular and supply-challenged neighborhood like Greenwich Village or Tribeca, for example. These sections of the market are still seeing full price offer, multiple offers, and short periods on the market. The news is good for supply and demand too. Inventory has declined every month since the summer, but in March we finally saw a net gain in available inventory. For the first time this year, New York City had more new to the market listings than those under contract and off market. This is a significant shift as the market moves into spring, the active listing season, and perhaps as the second quarter begins, the market will see enough supply coming to the market, enabling buyers to find the homes they look to purchase before interest rates rise again. It is also important to note that while 5% rates are definitely higher than the pandemic record low of 2.5, it is still a low rate compared to 1981, for example, where rates were over 16%. With buyers noticing the rise in interest rates and rushing to secure a deal, Manhattan housing market is seeing a reverse effect than the rest of the country. Strong demand is pushing up prices across the board, with the average sales price climbing 5% from the last quarter and nearly 20% from the first quarter of 2021. Last week, the Pulse Economics released their report, the latest home price expectation survey. The survey reveals that the average of the expert forecast calls for a 9% increase in home value in 2022. So, paying a higher price for home and a higher mortgage rates can be a difficult pill to swallow. However, waiting will just cost you more. Stay up to date on New York City real estate market, subscribe to my YouTube channel, and follow me on social media for the latest real estate news.